What's up, everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen, and I'm the founder of Wolves of Investing. If you want to learn how to achieve financial freedom through investing, be sure to click on the subscribe button right now. In today's video, I'm going to be talking about my game plan. If you've been following my monthly M1 Finance portfolio reviews, you know that in those videos, I'm showing you how I'm building a portfolio on a budget with just $20 to $30 to $40 a week. And those videos are meant to show you that it doesn't take a lot of capital to start investing. In today's video, I'm going to walk you through some of my other bigger portfolios, the ones that make up a larger portion of my wealth building strategy. I'm going to be going over my emergency fund, my 401k, my 457, which is very similar to a 401k, and my Roth IRA. And the reason I'm doing this is because I think it would be interesting to a lot of my viewers to see how I'm managing $300,000. So the first thing I wanted to talk about was my game plan for my emergency fund. Now, I know this is an investment channel and you might be thinking, why the hell do we want to talk about emergency funds? Well, I'm going to let you in on a little secret. The reason I'm able to invest aggressively and make good investment decisions and grow my portfolio is because I have a solid emergency fund. One of my investment heroes is Warren Buffett. And to quote Warren Buffett, be fearful when others are greedy and greedy when others are fearful. By having a solid emergency fund, I'm able to follow Warren Buffett's advice. As long as I don't lose my job or some other emergency happens, I'm able to be greedy when others are fearful. If I didn't have a solid emergency fund, then I would be fearful when others are fearful. And that's not something you want to be as an investor. I recommend everyone to have a minimum of 6 months in their emergency fund. Currently, I have an 11-month emergency fund. And my game plan right now is to not let my emergency fund go below 8 months worth. For me, personally, I feel that I need a minimum of 8 months emergency fund for my own personal and financial situation. And everyone's situation is different. You know, some people may feel like they need a 2-year emergency fund. Others may be perfectly fine with 6 months. It's really an individual decision on how much of an emergency fund you should have. And if you want to calculate how much of an emergency fund you need, I just created an emergency fund calculator on my website, wolvesofinvesting.com. I'll leave a link in the video description. Check it out. And if there's anyone you know that you think could benefit from this emergency fund calculator, feel free to share it. And if you do share it, let me know. I think that would be totally cool to know that others are using my emergency fund calculator and benefiting from it. That would be so awesome. The second thing I wanted to talk about was my 401k plan. So let's dive right in. Currently, I'm contributing $160 per pay period into my 401k. I get paid every 2 weeks, so that means I'm contributing $80 a week. So far, I've contributed just over $2,900 for the year, and my employer matches up to $2,000 per year. For those of you who do work for an employer that matches your 401k contributions, you should definitely take full advantage of it. As we all know, stocks went into a bear market a few months ago. And at that time, I doubled my contributions to $320 per pay period. But now stocks are pretty much back at all-time highs. They're within 5% of all-time highs. So that's when I lowered my contributions back down to $160 per pay period. So my employer's 401k plan allows me to invest in mutual funds through Russell Investments, and it also allows me to invest in individual stocks through Fidelity BrokerageLink. In my 401k, I have most of my money in a Russell 1000 index fund, about 10% in the Russell International Index Fund, 9% in a Russell Small Cap Fund, and 1.8% in individual stocks in my Fidelity BrokerageLink account. I'm not going to tell you what those stocks are right now because I want to save that for a future video. My general game plan for my 401k is to keep my allocations roughly the same, but I am planning to increase my exposure to individual stocks. So next, I want to talk about my 457. For those of you who don't know, a 457 is very similar to a 401k. There are a few additional situations where you can withdraw money from your 457 without penalty. Those situations are listed on the IRS website. Not that I would ever want to withdraw money early from my retirement accounts, but it is nice to know that I can in certain situations. My employer doesn't match contributions in my 457 like they do for my 401k. Currently, I'm contributing $420 per pay period into my 457, so $210 per week. So far this year, I've contributed $4,980 into my 457. The strategy for my 457 is a lot different than for my 401k. Most of my 457 is in Fidelity BrokerageLink, where I primarily invest in individual stocks. My game plan for next year is to take all of the investable money in my 457 and put it into Fidelity BrokerageLink. My employer's plan allows me to invest up to 95% into Fidelity BrokerageLink. In my 457, I own 18 individual stocks. I also own a biotech ETF. The ticker is XBI. I really treat this like an individual stock. I really believe in the long-term prospects of biotechnology, but I don't really know enough to invest in individual stocks in that sector. So I decided to buy the entire XBI ETF. Because I treat XBI like an individual stock, I consider myself owning 19 individual stocks in this portfolio. I also own NOBL, which is the ProShares S&P 500 Dividend Aristocrats ETF. I treat this ETF more like an index fund because it's pretty well diversified. The reason I use this ETF instead of an S&P 500 index ETF like VOO is because this is a tax-advantaged account. So any dividends I receive, I don't have to pay taxes on them. I don't have to pay taxes on my 457 or 401k for that matter until I start taking withdrawals. So I prefer to get more dividends in this account so I can use it to make more investments. I also have some money on the sidelines in what I consider to be cash. I invest in the BND, which is a bond index fund. Some of my money is in the Fidelity Default, which is FDRXX. And I have a couple thousand in a CD. I like keeping some of my money in cash so that if an opportunity presents itself, I can jump on in. About 14% of my money is in cash equivalents. When times are good, I like to have cash in my account. Going back to Warren Buffett's quote, I want to be greedy when others are fearful, and fearful when others are greedy. So my game plan for this account, I actually feel like 19 stocks is a little bit too much for me to own. So my plan for this account is to look for opportunities to sell some of my investments and rotate them in to some of the companies that I believe more strongly in. I plan to get my stock holdings in this portfolio down to about 12 to 15 stocks. Okay, so the last portfolio I wanted to walk you guys through was my Roth IRA. I currently have my Roth IRA on TD Ameritrade. And I manage this account very similarly to how I manage my 457. Primarily invest in individual stocks. My account value is just over $72,000. And like my 457, I do plan on selling some of my investments. I would like to get my portfolio down to roughly 12 to 15 holdings. And one huge change that I'm making is that I'm transferring a big portion of my Roth IRA over to M1 Finance. I'm really excited about this transfer, and I'm really looking forward to making some videos about investing in my Roth IRA on M1 Finance. So be sure to keep an eye out for those videos. All right, guys, so that's my game plan. Let me know what you guys think. I plan on making these game plan videos every few months or so, so you guys can take a look at how my portfolios are progressing. So question for you guys, what are you guys invested in? Mutual funds, individual stocks, or other? Drop me a line in the comment box. I'm really interested in seeing what you guys are investing in. And if you enjoyed this video, please remember to click that like button. Thanks for watching, and I'll see you next time.